Chris. I'm with Grid. So we had 28 people last month. That was our first meeting. This is our second meeting. Grid's an organization. We are global, actually. We're the largest agent-owned investment group in the world. So we have over 20,000 members. We are right at 22 different communities all across the United States and a couple outside the United States. And this is just an area, it's very casual. So we're gonna do like podcast format. We're gonna get to know everybody, what you do for a living, kind of what your goals are. And then we're gonna talk about the man of the hour, David O here. He'll be doing the majority of the talking. So if you wanna introduce yourself, Stephanie.
Hello everybody, I'm Stephanie Atwater Tellee. I am a real estate agent, and some of my goals for the year, I didn't believe in wholesaling, and now I do. And so I just want to get around the language and get around to me because I learned retail. So wholesaling and a couple of flips is what I aim to do. And before I get into like owning doors. So
give us one big win.
one big win.
One big win.
Well, I've named my property. I've put it in the LLC, and today I got my Google phone number.
Hey everybody, my name is Trace Armstrong. It's my first real estate related meetup. I'm just kind of an aspiring real estate investor, aspiring real estate agent. Goal for 2023 would be to have my real estate license by the end of the year. So yeah, just kind of looking to grow my network. Currently have my primary and looking to build by the end of 24. So hopefully networking some good home builders as well. So,
Okay. Build a house to live in.
Correct.
Rent
yeah.
out your existing home.
Correct. My mother.
Yeah. Yeah. That
All
works.
right, I'm gonna ask everybody for one big win, so get your wins ready.
I mean, showing up today. Yeah, showing up today and
Yeah.
taking that first step at a networking event. So yeah. today's
Welcome.
a big win.
Congrats.
Welcome.
Jason McGowan, just new real estate investor. My wife and I chill here, and we bought a few properties last year. We have several properties. Did a lot of last year was a lot of learning, and this year's more learning. Just trying to learn more. Our goal is to buy small multifamily in the 12 to 30 unit kind of range. Just trying to kind of figure out creative strategies is right what we need to be learning about. Big win today. Well, we have a single family home that we finished renovating, and we began showing it for rentals. So we had a showing today. So just continuing to work on that, and hopefully we'll get that one running in the next week or so.
Well, my name is Chen. I work as a nurse, and we have 16 doors currently. Hopefully we'll keep on growing, get bigger. Big win will be showing up here.
Nice. Good. Do you guys have a goal of how many doors you want to get to?
Well, this year we're hoping for like 30 doors, like additional 30
Yeah.
doors. But I don't know.
Yeah.
It's really because last
This
year.
is going to be a really great year.
Last year was crazy.
Yeah.
I mean, my background is nursing, so it has nothing to do with real estate, it's healthcare. And I got into real estate just because COVID made it crazy. So I want to get out. That's my goal eventually. I want to get out of nursing. And last year we bought all the stores. Just we learned to flip. Never flipped house before. I learned to finding contractors. That's hard.
Yeah.
I learned to turn over units and manage property managers because you have to manage them, otherwise your money is gone.
Yeah, and
So-
we'll actually walk through all of that throughout the year, like how to manage properties, how to find contractors, how to build a team.
So we're just learning, which is crazy.
Nice. Well,
And,
welcome.
Keep on going. Yeah.
My name is Jesse Sproul, and I did a couple of deals, wholesaling and rehabs, and I own a few rentals. My one big win is switching over to Keller Williams.
Like today, right?
Yeah. It's my first day out here, so it's a big win for me.
Nice.
Welcome.
Hi, my name's Tom. I'm an investaholic.
Hey, Tom.
We do small multifamily value add properties. And then we've got a little contracting / maintenance company that's being grown on the side. Just trying to create some synergy businesses. I suppose my goal for this year is just to add 3 more of the right properties, 3 more multifamily of the right properties. And my win today, selling, let's see, we walked a 12-family building that we're selling right now that we got back in 2020. Looking to get a very good return on that we can reinvest in some new value-add properties.
Nice.
Yeah.
And you guys had a lot of success in a short period of time, too.
Yeah, we got started in more seriously in 2019.
Yeah.
And we're up to about 50 units now. And yeah, it's like a full-time gig. Yeah. But you know, it's 50 and they were all value-add properties, so there's a very high amount of equity in it, which is really our strategy going forward. We like the higher amount of cash flow with a smaller amount of work. We like to make it easier. Yeah.
I like that.
Aaron?
I'm Aaron Dames. Looking to be more of an investor. Kind of I'd like to start getting into multifamily homes, kind of like the Shaw Tower Road District. Maybe try and do half Airbnb, half rentals. Kind of grow from there. Big win. Time for the gym today.
Nice.
Start going back to that and get back in routine.
My name is Mike Holden. I'm an agent. I've done a handful of rehabs. Last one I did, I kept as a rental. I'm enjoying that. It's hard though because it's worth so much right now. You look at how much you get at the end of the year and you're like, I could sell it now, make what it takes 10 years to get, but I'm trying to build that up. So the goal is to buy 2 flips and 2 rentals this year. And then if I get that done, then try and grow again for next year. Big win is just networking at all costs everywhere I go. And may have sold you your first one years ago when I was with the Denny team.
Yeah, that was one of my first.
Like-
That was her first flip, I think. Yeah.
Was it that house in Maryland Heights?
Yeah.
That small house? Didn't that come from like Jan Duke or something?
Yeah.
I came to find out afterwards. Yeah.
Yeah, 'cause,
Yeah.
yeah, she got it first, and then we were working it, and yeah.
Yeah.
I just remember. So I watch you on Facebook. Just keep growing and growing and growing. So
That's
congrats.
awesome. Thank you for helping us.
Small world.
Yeah, it is a small world.
Hi, I'm Bob DeClue. This is my boss, Aaron. A little smart for the first. Yeah, we've been around the game for a while. We started in 2002. I'm full-time into the business. Currently, we do a lot of fix and flip right now. That'll probably continue to change. We do a lot of turnkey. That's the biggest part of our business. As far as our personal investment strategy, we're really shifting heavily into both group homes and single-family assets, and then assisted living memory care, which we've been working on our first development now. We're almost at our 3-year anniversary, but we're getting there. We had a big win with that today, so a little bit of step at a time. We've had our first big delve into development, but so we're trying to get your way through that.
Are you guys doing syndications on the bigger stuff, or are you looking to raise capital?
Oh yeah, we're raising some money. Yeah.
Okay, thanks.
So I'm Mary DeClue, so just been working with this guy for the past, 20 years. I do have my license, but I don't use it for retail purposes, just for investing. And we didn't say when. Did we say when? We did? Okay.
You said you had one, you didn't say what it was. Curious minds want to know.
No, we had some big wins with, on our certificate of need with the
Oh,
state of
yeah.
Missouri for our
Yeah.
senior living project.
Yeah. And on the rehab side, we just sold, I think in the last month, 6 properties. I think 6 properties, we've got through all the closings on that, so now we're looking for some more. So,
Nice.
got through some difficult ones.
I'm Scott Brayfield. I'm an aspiring investor, so I'm not anything yet. So we have a goal of, let's say, we're flipping or renting out 3 this year. So yeah, we have plans, none really. I have an LLC set up. I do Airbnb out my own house sometimes when I'm traveling. So I've at least been exposed to that just a little bit. But so yeah, really just looking to find profitable properties at this point.
We'll go Meg.
Hi guys, my name is Meg Bergman. I'm an aspiring investor as well, kind of like everybody. I had inherited some property and I was raised in real estate, but kind of got away from it. And then when I inherited the property, I said, look, I got time again. So I got my license and I'm back to learn.
I'm Matt Cresco. I started in real estate, passively doing house hacking. I did a duplex and then bought a townhome, started dabbling in it. I was in 8 years of recruitment and decided to get out of recruitment because I like real estate a lot more. So I dropped everything and got out of recruitment in July this year, full-time real estate investing, which was apparently a really good time to get into it because it took me 6 months to get my first deal. Flopped around and landed at Faster House, where I'm a buyer with them now. I'm learning a lot, and so
They know a little bit about it. They know a little bit.
Yeah, just about 268 buys a year, right?
Yeah.
So I am paying for education there, and it's well worth it. And so the goal was ultimately to build a portfolio, but going 6 months without really a paycheck obviously put a wrench in that. So now that I have my bearings, the goal is learn the wholesale side as well as I can and finding the off-market deals, stack cash for this year, and then go back and revisit adding to the portfolio.
Yeah.
One big win.
Yeah. Oh, I closed my second deal today.
Oh, sweet. Eunice the realtor.
I'm Eunice, 21-year-old real estate investor. I own 16 rental properties. I've done a lot of wholesale deals. So right now I'm trying to jump into apartment buildings. So, and creative financing also. So that's what I'm doing.
You have some hot leads.
Yeah.
What about your win?
My wins, maybe a week or two ago, I closed on a creative financing deal, it's called Sub 2 deal. I put $3,000 down, house is worth $185. She was $79K on it, monthly payments $500. Easily, I can rent it out for $1,500. So I'll be making some good money from that.
Yeah.
Yes.
And low interest rate.
Oh, yeah.
Yeah, so my name is Alex. I actually was working with David as a kind of a student, and so he helped me through my first deal. That was last year. Was kind of rehabbing it most of last year. You know, had a hard time like finding homes, and then I'm looking to get rented now, and I've got a couple applicants. That's my
Nice.
My name's Gray, like the color. I'm an agent and a home remodeler. I focus on building built-ins and doing tile work and finished carpentry for homeowners. And I guess the latest flavor that I've been focused on in investing is multifamily. So I'd like to go after getting some multifamily, anything from 2, 3, 4 and bigger, getting into commercial stuff. And I guess a big win would just be recently I've started to focus more on building my business up, and it's just been, I've got so many opportunities, it's been awesome. So just kind of taking that route into, you know, this realm of real estate.
And when did you go out on your own?
Went out on my own, August of 21 is when I started doing remodeling work on my own, and then I got licensed early last year.
Yeah.
So.
Which is awesome.
It's been good so far.
Yeah. Success.
It's really good so far.
I'm Tracy. I'm David's wife, so I won't steal his thunder.
We tried to get Tracy to speak for the record, but instead we got David.
He just took it. So we obviously invest in real estate, and my role mainly in that is we do a lot of value add properties, so a mix of buy and hold single family with some small multifamily, have a short-term rental and 2 mid-term rentals. And my main role in that is I handle all of our construction, since we burr most of our properties, and I oversee our property management. So, yeah. And I guess our big win, my big win, would be we finally got one of our midterm rentals on the market, furnished and ready to go. So if you know any nurse friends that are coming to town, it's in a really great area of Dogtown. So I'm excited about that.
Can I add something?
Yeah.
Real quick? I forgot to mention that in my company, I sold a property to a wholesaler, and he's out of state, and so he's hired me to manage the flip for him. So
Okay,
I'm
that's a
getting
good way
some
to learn.
experience in that and working with the contractor. But there was one term that I didn't understand, and I'm so proud of myself that I understood everything else. Well, what is the value add?
That's an important one.
Right. What is value add? When you two mentioned value add property.
You find a property that needs a lot of work, and so if you intend to hold it, so if you buy it for cheap enough and then you do the repairs, and then you're all in at 150, but the property's worth 300, then you have $150,000 of equity. That's like a value add type property.
Okay.
Or maybe you add a room, maybe you
Instead
add
of like a
second
turnkey
floor.
property.
Yeah, any way to add, to improve the value of the property.
Okay.
Yeah, the cheapest, biggest value add is always gonna be paint, so always paint your properties.
Yeah.
Because your return on investment's always more than the cost.
It's always hard, yeah.
All right, I want to introduce my team. Some of them left. The two girls that checked everybody in, those are my daughters. So I don't know if you guys know, you can pay your children up to $12,000 every year if they work for you. So my kids work for me. They have for a long time. I take them on all my rental properties. They meet with contractors with me. They do everything with me. They go over numbers. I drew up, a whiteboard, kind of the process real straight, how to burr houses. So if you have kids, and they're in the age, high school, whatnot, and you want to bring them college, bring them. We had some last time as well. The guy with the phone, take a picture. Cole is with us, and then some of you guys might know Tellee. He does acquisitions for a pretty big wholesaler in St. Louis here. Then we have a couple people that are offline, but we make up Grid St. Louis here. So there's about 4 of us that run the Grid St. Louis team. So, all right, we're gonna get to know David now. So, and you famously go by David O.
Oh,
Because no one can say Ounanian.
Right.
But I practiced it 100 times a couple weeks ago when we met, so I can say it perfectly.
Very good.
So, all right, let's talk about sub 2 first, because I think that's the big opportunity. But do you want to tell us why that's such a big opportunity in this market?
Well, let me introduce myself.
Yeah,
first.
let me introduce yourself.
Everybody else got to go. Yeah, so David O. Real
That's
estate.
why I was afraid of having Tracy introduced, because.
So real estate agent, investor and coach. I got started kind of on a different path. So I was told to go to college and get a degree and get a job, right? And so I got my bachelor's degree and got a job in IT. Worked as a software engineer for 12 years. And was climbing the corporate ladder and got totally burned out and hit a wall, and I was just completely unhappy, unfulfilled, always working for the weekend. And I'll never forget walking in to my boss's office after I had gotten my 5th promotion over these 12 years, and he said, "Dave, I noticed you're only working 40 hours a week." And I was like, "Last time I checked, that's what I was getting paid for." And he goes, No, we just promoted you to a senior position. We expect 50 to 60 hours a week from our senior managers." And I was just scratching my head walking back to my office, because I got a 5% raise, and here we're talking about raising my hours by
20 yeah, that's right.
Gosh, so that day, I'll never forget, instead of listening to a fantasy football podcast, I started looking for ways to get financially free, and found real estate investing, and just started soaking up everything that I could, going to meetups just like this, meeting everybody I could possibly could in the industry. Mike just said, he helped me get one of our first deals.
How many years ago do you think that was?
Probably 2018. Yeah, probably 5 years ago. but yeah, this stuff works, like coming out to meetups, meeting people, connecting with other investors, agents, rehabbers. It's really a really cool way to get
What
into
podcast?
Bigger Pockets. So I
Never heard of it.
Listen to probably 300 of those.
Okay.
And so a little lesson there too is I read all the books and listened to all the podcasts and knew enough to be dangerous. Went out, bought my first deal from a wholesaler and made every mistake in the book. Our first deal was a complete nightmare. Stressed Tracy out tremendously at home, like about to kill me in my sleep type of thing. We had saved up $100,000 in our savings account working our corporate careers for 12 years, right? And everything in this property was just going wrong. I had got it inspected before I bought it, thinking I was smart, but utilities were off. So water was off, power was off.
When you bought it?
Yeah, when I bought it. I thought I could save $200 and not get the sewer camera inspection. Like literally everything needed to be replaced. Foundation walls were falling down. So what was supposed to be a $20,000 make rent ready and Berra rehab ended up being $55,000, and I sank every dollar in my bank account into this property. At the end of the 6 months, we didn't know how we were going to pay for the next thing that went wrong. Thankfully, offered an agent bonus, put it on the market, got it sold, lost thousands of dollars, but got a PhD in what not to do rehab.
So you purchased it as a rental.
Yeah, and then had to sell it. We had all of our cash was stuck in there, and it was a scary time. But knock on wood, hadn't lost money since that first deal. But hanging around rooms like this and learning from other people's mistakes was key to that.
Yeah. How did you find the wholesaler?
Craigslist.
Okay.
Mistake number one, probably.
When's the last time you guys used Craigslist to find it?
That's the last
time.
Yeah.
All right. I mean, it's still out there.
Yeah.
You know.
So this property.
How'd you guys? You financed that one 100%
Just paid cash.
Okay.
Yeah. So everything in our savings account was stuck in this property, and it was scary.
Yeah.
I was going out. I ended up getting help. I ended up joining a mastermind, hiring a coach, and I didn't even have money to pay for that.
Yeah.
So I ended up opening a credit card that had the 12 months, no payments. Yeah, 0%. And just praying that I was going to make it. But Tony Robbins says, burn the boats if you want to take the island, and I had to do that at that point in time because I wasn't making it on my own.
Did you know anyone else that was doing investment properties that you could turn to for help? Or
no, yeah, that's one of the things that is so interesting. So if you don't have, likely if you're not investing in real estate, you probably don't have any friends or family that's done it either.
Yeah.
So then when you go to these family gatherings and you start telling all your friends that you're going to start investing in real estate, they say, what are you, crazy? You're going to lose all your money, right? And so they were right. Yeah, it's scary being around that atmosphere. So it's like plugging into these rooms and finding groups of people that know, that have done this. It can give you the confidence and help steer you in the right direction. So, yeah.
How much did you guys lose on that property?
$7,000.
Okay. And that's actually really not that much.
Yeah,
it's not terrible.
Not in the grand scheme of what you've made.
There was a lot of backbreaking on our end, so over there too.
Yeah.
We were like shoveling gravel
at
over
some
there.
at
I
some
mean,
point you're probably not hiring contractors. You're the one.
We were.
Yeah, one of the funny stories about this property. There's gravel driveways all up and down this neighborhood, and when I went to go get occupancy, they said the new ordinance is that you have to put in a new asphalt or concrete driveway. And this thing was like this huge 2-car driveway, probably 40, 50 feet long. People were quoting me for $25,000 to pour concrete. And I came up with this idea that we are going to pour the smallest parking pad and then turn the rest of the gravel into I got some decorated landscaping rock and poured it over the other. And it just so happened to be during the holidays when I was bringing my plans up to the city of St. Anne for this approval of this. And so the main guy was on vacation. And so somebody else in the office just stamped an approval on there. And I'll never forget when the guy came out for his re-inspection and said, no, that's not gonna fly. And I just started waving my plan like, this is approved, buddy, right here. And he's like, well, I'm gonna have to let you go on this one, but that's not gonna work anymore.
I'll tell you guys a hack on inspections. The person I bring is my mom. I tell my mom to go to the property, and whatever happens, happens, because she doesn't know anything about the property.
Oh,
so
that's
like,
awesome.
she's like, I don't know anything. I'm like, that's why you go to
That's
all
why
my inspections. Like, just like, yeah, like everything was like
Have
this
him-
when I bought it.
Every time he says something wrong, have him explain in detail how she's gonna fix that. He'll stop making his list.
So yeah. So all right. Well, let's get into sub 2. What is sub 2? I guess just
Yeah, so sub
subject
2 is subject to the existing mortgage or loan on the property. And so we're talking about creative financing tonight. Subject 2, in this current market hasn't been all that popular because usually when subject 2 works good is when the loan on the property is about equal to what the value of the property is. So to give you an example of this, let's just use $100,000 as an example. Let's say somebody's trying to sell a $100,000 property, and they've got a $100,000 loan on the property. So they're trying to sell it for $100,000. They got a $100,000 loan on property. Now, if they use a realtor, they're going to have to come up with $6,000 at closing to pay the commission. So it's actually going to cost them money to sell this property. This particular example could be a good opportunity for an investor to come in and say, hey, you don't have to pay the $6,000 to sell your property. I'll just take it over from you. I'll take over your mortgage. I'll make the payments. I might add some value to it and then refinance it out later down the road and pay off your loan. But you'll be able to get rid of the property without
So the
paying any
loan
money
stays
out of
in
pocket.
the seller's
Yeah,
name.
so mortgages used to be assumable back in the day. None of the mortgages that are nowadays you can actually legally assume.
They're starting to get
Is that right?
FHA is they're starting to assume those again.
Oh, really?
So
VA a little bit too.
Yeah,
VA.
VAs also. So the reason that people weren't assuming loans before is because they had 6-7% interest rates, and then you would come in with your 3% interest rate the last few years, and you wouldn't assume them. So that's why it's never been talked about anymore. So right now you have two assets. One, you have your property that has the equity in it, and your second asset that people aren't realizing is you have the loan on your property that you can have someone else assume. VA if they're a veteran, or FHA if they're qualified for FHA.
So if it's a VA, the person assuming it would have to be a veteran?
They have to be a veteran.
Okay, got it.
Yeah. Or a style. I mean, there's
in
the criteria.
in FHA, the person would have to be an owner occupant, right?
Yeah. Yeah. So it can't be four.
Got it.
How does
But-
that benefit the seller though?
Benefits the seller because they can get a higher price because the purchaser's payment is a lot lower.
But they still have that loan
They take over the terms of the loan
in their name?
in their name on a assumable loan, but not on a subject to loan. So the subject to loan, right? The owner is actually keeping that mortgage in their name.
Yeah.
Typically, are they buying another home then, or what is that seller? Where are they going?
Yeah, it depends on their situation. Yeah, a lot of times they're selling it that way because they would have to pay to get rid of the house.
Right.
And so a creative investor can come in. If I don't have to put a down payment on the house, I might have more money to fix it up and be able to pay a higher price for it because I don't have to have as much cash out of pocket to acquire the property.
Yeah, and then so the investor they can either sell it or rent it out,
Sure.
right, to someone else.
Yeah. Yeah, an example of this, we did a subject to deal last year where it was a house in the city, Tower Grove East, and I think the loan amount was like $260,000. It was a VA loan actually, and they had it listed with a realtor for $265,000, and he was knowing that he was going to have money out of pocket at closing to get rid of this house, and it wasn't in good shape. It didn't show
Possibly
well.
repairs.
Yeah, there was repairs, and I mean, he didn't even have money to clean the house. There was like doggy doo-doo on the carpet, like it was not good. And so I came in and I said, how about I just take this over from you? Like, you don't have to pay anything. I'll take care of closing costs. I'll just take it over and I'll make your payments for you. And so he said, that would be great, Dave. Like, that would actually be amazing for my family. And
So he was stressed out. He was in a.
Because he had this vacant house that was just, he's having to pay the taxes on it, the sewer bills, the utilities, and he's knowing he's have to come up with thousands of dollars to pay the realtors the commission to sell it. So it's a perfect solution for me to come in and say, hey, I'll take this. I don't have to get a loan on the purchase. I don't have to put up $20,000 down on a 260 property. What is that?
Yeah,
50, 60 grand. So that's a lot of cash that I'm saving out of pocket. So we went ahead and took it over. I told them, you know, we'd pay off his loan in 6 to 12 months. I kind of give him, you know, a ballpark there.
Oh, which is good. That's quick.
Yeah. So that's pretty quick. So we fixed it up. 6 months later, we refinance it.
So let me back.
Yeah.
So when you guys purchased it, what do you use you put that property in your name? What does that process look like?
Yeah, so this particular
How do you make
one-
an offer on a subject to?
Yeah, so it depends on what kind of financing I'm gonna get on the back end. So this particular property I put in my personal name because I knew I wanted to get a 30-year fixed rate loan on the refi. But if I'm getting a commercial loan or if I'm using private money or hard money or something like that, I'll put it in my LLC name. So you basically write up a contract, and then in the special agreements is where we have a clause that says, hey, this is subject to the existing mortgage. The buyer is going to assume payments, take over payments for the seller. If for some reason I don't make the payments, we put in there a clause that the seller's able to quit claim the rights to the property.
And then
so that gives
any
him
principal
protection.
pay down goes to the
Right,
seller.
yeah.
To the seller.
So that gives him the protection that if some reason I stop making payments or something happens to me, that he can take this and legally get the property back and be able to do whatever he wants with it.
And you guys are paying him or the bank?
The banks.
You just send the check directly to the bank?
Yeah, so we just start sending the payments into the bank. We tell the bank that, hey, the new billing address is our office or our house, and we start sending in payments.
So how are you able to refinance it?
Right, so now that I've bought it subject to, I'm on title of the property. He's no longer on title, right? So I'm gonna go to any lender I want and say, hey, I'm gonna do a cash out refinance on this property. And typically they will be willing to give you 75% of the new appraised value of the house. And so I had my numbers worked out to where 75% of the new value was gonna pay off his 260 and give us our construction costs back. So this was creative enough to where we got this property up and running with basically zero cash left in the deal.
Yeah. And that's the value add that you guys are talking about?
The value add, yeah.
If it wasn't for that, then we probably would have had to keep it as a rental property.
Sure.
Okay, interesting. So has anyone else done sub 2 units? You say did. Bob, what does your last one look like?
Alright, so this is where you get the dumb guy syndrome. So I've done one, exactly one.
Just one?
So we did a duplex, this is probably 2005, 2006, nice part of Holly Hills. Perfect setup for it as far as the owner's equity and whatnot. The mistake that I made was keeping the former owner, now tenant, in the property on one side. Because I have a big heart, you try to do the right thing for people. So about 4 years later, she came back to us and said, well, I didn't know what I'd signed. And this is my house, and they never told me. So we get the attorney involved, and our paperwork was spot on. We had done everything right, but we would have spent $20,000 or $30,000 to defend it. And so what the attorney's advice was to return the property to the state it was in when you assumed it.
Did you have to put holes in the walls? Or
Actually, it's in pretty good shape.
Yeah.
And her unit looked exactly the same as it did. 30 days later, we turned it back over to her. We just looked her wounds, and we were blessed. We moved on to other things, and 30 days later, she lost the foreclosure.
And you guys bought it again.
We bought her 60 days out of foreclosure. We stopped the foreclosure.
Yeah.
Which is really the only loss we took on the property because of the cash flow against it.
So you were collecting rent though from both of
For
them.
both of them, yeah.
So you made that profit, you just didn't
And
keep
we
the.
were 100% in the right, but you can
Yeah.
be right in business and still come out financially behind. So we made a business decision there instead of, letting ego prevail. But, yeah, and then she turned right around and lost it. So moral of that story is don't ever lease back. Do that. And you'll get those stories, and I fell for it, hook, line, and sinker. She had nowhere to go, she's gonna be homeless. And the whole sob story behind it. So, would I make that mistake again? Just unfortunately can't always.
Yeah, and then that's prevented you from doing any other sub two deals, or?
We just haven't really pursued it, but I feel like to today's point, the market shift.
Yeah.
We're gonna have a lot of really cheap mortgages out there, and a lot of people that need.
This is a perfect market for subject to.
And it's coming, right? Having lived through 2008 and 2009, it's going to be a great market. There's going to be a lot more inventory out there, in my opinion. So I think it's definitely a strategy we need to start embracing again.
Yeah, as values start to come down, as it gets close to those loan amounts, those are perfect opportunities for this strategy.
And it's a way you can help people too, really get out of situations that the market's not going to help them get out of. So that's a good side, just one like that.
And I'm glad you shared that about the sob story. So when I was starting out, I heard so many stories like that. And so the whole time, my whole investment career, I've never spoken to a tenant, and that's on purpose because I don't want to have, the emotional side of it and be taken advantage in that way. So we've always put somebody in the middle, whether it's a property manager, somebody else that's working for us, that it's just business. We got to collect the rent. We got to do this. We got to do that.
That's smart. Yeah, there's it's a very emotional business we have a couple right now that, they told me this, yeah. What about yours that you just bought?
For mine, the lady that owned the property, she's a VA, so it's on a VA loan. But her daughter's husband is in the military, and he got sent to Hawaii, so she had to move there with them. So she was just paying the mortgage, and she was in there. So we tried to wholesale the property at first, but we got no luck. So when we talked to her about this subject too, she was like, well, yeah, that's maybe something I might be interested in. So we did our numbers, and then she was like, okay, I'll do it for only $3,000 if you guys want to. So I was like, okay, I can do that. And we had some complications in the beginning, only because she didn't understand it, and we didn't too. At the end of the day, we just heard of it and just read a little bit about it. So we had to do our research and hire an attorney to really give us what we needed to do. And one thing was that on a VA loan, you can't get the title in your name. It has to be in her name. But what you can do is get a land contract and also a warranty deed that can definitely on the back end. So, and just because she's in Hawaii, the documents sent out, I went back for a whole week and then got it back. So it took a minute, but it worked out.
What did the attorney cost to write that? 500? 2,500. Okay.
It was worth it.
And then you paid her 3,000.
Yeah, I paid her
up front.
Yeah. I waited until we closed, but I was taking care of the mortgage payments before we closed, just to let her know I'm more serious. I didn't have to meet her in person. I actually have a lunch with her and really just.
Did you go to Hawaii?
Did you go
to Hawaii?
No, not Hawaii. She came here for Christmas and New Year's, so she was here for like 2-3 weeks. So we got a chance to meet up and really talk to each other and build that bond and trust, so she knows that I'm really going to take care of her property and not make any mistakes along the way. So we built that relationship. We're talking. She's a very funny, elder lady, but so we've been good relationship so far.
Yeah, and that's been, building relationships has been like a staple of your business, right? I mean, I know we're able to purchase a lot of houses just because of building trust with the seller.
That's literally the best thing. Honestly, is building relationships, because it comes with a lot of opportunities. Honestly, so
Nice.
So you then rent that out to someone, lease it to someone?
Oh yeah, I'm going to. So the only issue with this one that I realized is because it needs just a little work because she hasn't been there in a minute. So I might have to put like $15K into it, but it's my own money that I have to put into it. So that's the only bad side out of it. But once again, it's 15,000, it's not really do much, and I'll give money back, so.
And what's the ARV?
185.
Yeah, so you would have been, again, 40 grand out of pocket
Yeah.
versus 20,000?
Yeah.
So, yeah,
Those
so
are
it makes
the
sense.
options. Yeah.
Yeah.
I have a question. So whether it's assumable or subject to, basically the down payment to the seller is gonna be the difference between what you're deciding, the purchase price and what they owe to the bank, right? To clear them out and take over the title?
Well, you don't have to have a down payment. That's the
I mean,
sweet
how
thing
do
about
you-
sub
how
two.
do you cover
It'd be negotiable, so, yeah, you could say.
Because in this market, they're probably not upside down.
Right, but that's what I'm saying, if they have 50,000 in equity, you're essentially on the hook for 50,000. If the bank is not cutting them a check for selling, or if your lender is not cutting them a check for,
So you're just
for
picking, like if
selling.
it's $100,000
'Cause you're just
property,
picking
you're
up,
just
there's
picking
no-
up for
there's no
50.
lender
You're just
back.
saying you owe 50, I'm taking over your payments of 50.
Right, so essentially you gotta meet them to what they owe. Am I catching this right? But you said that you just paid like $3,000.
Yeah, so I paid 3,000, and that's because when we were wholesaling, she was supposed to make some money, but we didn't get to wholesale, so she didn't make her little money on top of what the mortgage was. So she was like, okay, I'll walk away from this whole deal and give you the property for only $3,000. So it's just something she wanted. At first she started at 18, honestly, but we got her down to 3,000 because she just wanted to walk away with something. So we're like, okay, that's fine. You know, 3,000 is really nothing for a property worth 185 and you owe 179,000 on it. So it just seems like really good.
From my, if I can hop in, from my understanding for what you're talking about, if they've got a lot of equity in it, it would be a combination of subject to and seller finance. So you'd subject to the existing loan, and then you'd agree on monthly payment for their equity in the place. Is that?
Okay.
Yeah.
So
If they wanted 40 grand, then yeah, you could.
If you want them to walk away and never talk to them again, you basically gotta,
Yeah.
clean out the equity.
Yeah, you could seller finance, and you could put them even in second position on title, I guess. I mean, yeah. Actually, probably what you would do, you'd probably do a promissory note, if you were gonna do that. So, that's how, I would structure it through a promissory note. If they wanted a large amount and you really didn't wanna come out of pocket any money. But the thing is, you're gonna have your first and second mortgage, and then now, like if I was gonna which we can talk about seller finance too. Like, what's our guy want on the seller finance deal? 25% down. He wants probably 6 or 7% interest rate. So that's why the seller financing part is difficult, because you're not getting the whole point of subject to is so you get your 2 or 3%. Yeah.
3% interest rate.
Yeah. So.
Okay.
Yeah, subject to, for me, I think the biggest benefit is not coming up with
Not
down
coming up
payment.
not coming up with down payment.
Seller
And
financing.
you're hoping their mortgage is less than, you're hoping the mortgage is the, $800 mortgage, $1,500 rent. You're getting the cash flow. The equity doesn't matter as much in sub 2. It's more of you're not putting any money down, you're getting the cash flow off of it.
Yeah, so if there was a big equity spread, it might not make sense to do subject to.
Yeah.
They probably wouldn't do
Yeah.
it because they would just sell, like in your
Yeah.
instance, he would just sell his house.
It would make sense to both parties. So like example, like value's 100,000 and your loan amount's 80,000. Well, if I have to put 20% down, I can get that loan on my own, and then the seller, why not just sell it and get the whole 100, right? And get the loan
Or
paid off.
net 90.
Yeah, exactly. Yeah, and we can talk about seller finance. I think that's almost a completely different animal, whereas it's completely
That's like the true
negotiable.
meaning of creative financing.
Yeah, and that you can negotiate whatever you want. You're talking about 25% down. It could be 0%.
5%
Could be
down.
nothing. Could be.
Has anyone
whatever
done
they-
creative or seller financing?
We're doing a lot more of that.
What do you want to tell us? Or did you do seller financing?
I haven't, no.
I think your best customer there is somebody that's owns the property. It's probably a landlord, something they inherited. What are they going to do with that money?
Yeah.
Number one, are they facing the tax burden? So we pitched that pretty hard. Secondarily, what are they going to do with the money? It's about 0.5% to stick at the bank right now. We can offer them 5 or 6%.
Yeah.
And you'll turn some gears with that for sure. We've gotten creative with that before, if we wanted to hold it long term and get the seller to just go hold the second, then we can push it right into, longer term.
So you found it's someone that typically doesn't need the cash right now, right?
Those are good seller
Yeah.
finance.
Yeah.
And it takes a lot of relationship building, cause who are you kind of thing?
Yeah.
But, I think that's where when you invest time, you nurture that deal, that, but I think once you're comfortable having the conversation, I have found that people really do open up to it. If they're in the right position, it's all about, for them, it's not so much a distressed seller, it's more of
it's a business deal.
right, it's a business deal.
Yeah.
How, if you can put them in an advantageous position, and you're still in more of an advantageous position, it's a win.
Yeah. So when you guys are doing them, let's say the interest rate, it's usually 1 over prime, probably for portfolio loan or whatnot. So you're saying if we can get anything under 7% in seller finance, then you're getting a better deal.
Yeah, the last one I worked on, and it's still out there, it's a 4-family in Jefferson County. It's worth probably 180, she wanted 160. So okay, we'll pay 160, but we needed 0% for work. We ended up ballooned in 10 years. She didn't like that too much,
Yeah.
so then we start ratcheting the number down to get a slice of equity and ratcheting that rate up. I think it's all on how you structure the deal.
Or maybe say I can give you your 180, but these are my finance terms.
Right.
So you're negotiating your finance terms is also a way of negotiating.
I think you can pay 180 in that building at a 0% mortgage, right?
Yeah.
Even if you got a balloon on it, because by then rents are going to climb, value will cycle. So.
Any questions on seller finance or anything you want to add on? I mean, it's a hard one to talk about because the cool thing about real estate investing is there isn't a standard.
Yeah.
You can do whatever you want. Like
works.
whatever two people agree on.
It works great when you have somebody that's got a property they own free and clear and they don't need all the money today. Right. So, and especially you talk about the tax burden. So if somebody's got, $200,000-300,000 in
W-2
proceeds that are going to be coming in if they sell it today, they may not want to be take that tax hit in that year. And so you can structure a seller financing where it's over a number of years, they're getting a little bit of that $300K and paying a lower rate on top of it. So.
And did you use a loan servicer when you did that?
We have.
Yeah.
We didn't have the best of luck.
Okay.
I know the guys that do it a lot are pretty much using servicers. I mean,
Yeah.
I'll dig into that a little more.
Yeah. I think a loan servicer plays as that third party. So a loan servicer will take that owner finance loan and they'll work out the amortization schedule. If someone were to pay a little bit more, a little bit less, they're going to adjust all that. To me, it's like a third party,
I like the creepy amortization schedule because then it can be more of a simple interest versus.
Simple interest is probably the best because you just say 6% straight interest for the year instead of compounding. Yeah. So are most homeowners going for that like simple interest or?
Depends on your seller.
Yeah.
Most of them, I would say, yeah.
It's easier to explain.
Matt, you had something?
Yeah, so I haven't done a creative finance deal, but I've been trying. And so a lot of my strategy is going on the MLS, looking at days on market and just making offers. I have gauged an interest on seller finance in a way I didn't think I would, which is new home builders that are building like a lot of new homes, and now the market isn't as hot, so they're sitting for a long time. So those are people that own them outright, and those are people that don't need the money. And so being in the position that I'm in, I always offer 0% down. And what I'll do is I don't necessarily go a higher interest rate, but I've gotten some intrigue and I'm in conversations with new build properties, 0% down, and a 0% interest, but I'm able to offer like 30, 40, sometimes 50K over what the asking price is.
Yeah.
Again, it's just something that I guess it really just depends, like if you do a lot less and then you can add an interest rate on there, but yeah, haven't done a deal, but I've got like continuing to follow up, and there's interest in some of these, so there's a billion ways to do it. And I'm hoping to do my first deal here in the next couple of months, but it's just asking, you know what I mean? It's getting on and asking if people are open to it. So I don't know if that provides any insight at all, but it's super interesting, especially if you can get a property for 0% down and it cash flows immediately and it's worth $350,000 or whatever it's worth.
And it's new construction and deferred maintenance.
Yeah.
Hopefully
CapEx
10
is
years.
Nothing. Yeah.
Yeah.
For sure.
Yeah, that'd be really
That's a good
attractive.
idea. Yeah. So I'm gonna go off script a little bit, but what program are you guys using for like define properties, or do you guys use anything like PropStream or any data to find?
No, I mean, there's, and I tell a lot of my clients that there's so many ways to find deals. The good news is it all works, and the bad news is it all works.
Yeah.
So, you know, when I first started out, I was trying everything, and I wasn't buying anything.
You weren't doing it.
Yeah. So I decided I was going to go. My number one strategy was networking, and so we bought pretty much every investment property we own is from networking or referral.
Yeah.
One of my mentors when I got started said, Dave, it was 2018, said meet 1,000 people in the industry this year. Trade business cards with them. Not only trade business cards with them, but get their business card and ask them what their biggest challenge or their biggest goal is, and write that on the back of their card and keep it on you so you know like who's looking for what, who needs help with what. And I was able to connect a lot of people that year. I don't think I met 1,000 people, but I'm sure I met 500.
Yeah.
And a lot of those people are still sending me deals today, 5 years later. So it was a really good way to get out there and not have a huge marketing budget or anything like that, and just use my time and networking.
Yeah. Seems like the more people you meet too, like they're pretty open, right?
Yeah.
They're pretty open on telling you their strategies.
Sure.
What's worked for them.
Yeah.
I mean, did you have any bad experiences with people not, you know, when you tried to create those relationships that they
We
were
would
just
do some
very
cold calling
off-putting?
at times, and you know, like we would get like random lists and we'd call
Yeah.
them, and like people are mean on the phone sometimes. But
Yeah.
the networking thing is the best. We've bought
Yeah.
properties from neighbors that are existing properties. Just getting to know them, but.
Yeah, it's probably the easiest way. Is just telling. So you had to
It's
tell
just
you had to
being
tell
consistent.
people that you're in the business first.
Yeah.
Right, just so they're
Yeah.
aware.
And developing relationships. So the reason I got the business card and I knew what your biggest challenge or biggest goal was is because I might be able to act on that in a couple months. I might be able to find you that lender that you said you were looking for, or that house that you said you were looking for. I may have came across it and passed on it, but now I can connect you to it. And so I can build relationships and trust with people, and they want to do business with me again. So it's always trying to give first. And that abundance mentality was so attractive to me because, yeah, when you're on your own, it's like cutthroat. You don't want to tell any secrets and all that stuff, and that doesn't work.
Everyone already knows.
Yeah.
It's
Yeah,
on the internet.
It doesn't work, yeah. Yeah.
So, yeah, it's funny. It's why we do it for free. You know, we give the general information, and then your company kind of takes it a step further and says, okay, here's the 1,000 different ways that you can do it. You guys narrow it down,
Yeah.
right?
Yeah, you pick one.
Yeah.
You know, everybody's going to be a little bit different.
Right.
Yeah. So
Yeah.
some people want to do direct mail, other people want to do driving for dollars. It all works. Just you got to be consistent. Just pick that one and keep doing it until you get it.
Yeah. So, yeah, what do you, like someone that wants to wholesale and flip and buy and hold and do subject, like after here, everyone's like, oh, I'm not going to flip anymore. Or we did wholesale last month. Now it's like, no, I'm doing sub 2 now. Like, what do you say to those people that chase the shiny object, you know?
Pick one. Yeah.
Pick
Yeah.
one and stay
Yeah.
with it, right?
Yeah, I mean, just finding the deal is just the most important thing. Like, so like, my approach is like sub 2 or creative finance. That's just another tool in my tool belt. But when I'm going on an appointment to a seller, which is the main objective of all the networking or all the mailers or all the driving for dollars, is going on an appointment or talking to a seller of a home. And you want to be able to go in there, and the reason I got my license is so I had another tool in there. So anytime I go into an opportunity where somebody is thinking about selling their home, I've got all of the solutions available to me to be able to serve them. And so it's just finding out what is their motivation. Do they want to sell for the highest price and they don't care how long it's going to take? They don't care how many repairs it needs? Well, then I just put on my realtor hat and I list the property for sale.
Is that a weakness sometimes when you're going in as an investor? You know that I'll just list it.
Well, I mean, a lot of times I give people options.
Yeah.
So like, here's a price where I can buy it from you as is, and you can walk away right now. This is going to be lower, but here's the higher price, but here's all the downside of it. You know, we're going to have to fix it up. We're going to have to hold an open house. We're going to have to show it a bunch of times. You're going to have an inspection period. You're going to have a financing contingency. You're going to have a survey. You're going to have an appraisal done. It's going to take 45 days from when we get a signed contract to close. And so, are they willing to go through all that for the higher price? If they are, then fine. We can do that. And yeah.
Most people they just want to be done with it.
Yeah.
Oh, right. They're distressed people.
Sure.
So yeah.
Yeah.
All right. Now we have one
So
more.
yeah,
What else is there
I've
gonna be?
actually got an appointment this Friday out in St. Charles, and it's this lady had told me, you know, I'm thinking about actually flipping this house myself, and I go, have you ever flipped a house before? And she goes, no, I just inherited this property and I watch everything on HGTV. And so I'm like, well, I'm gonna bring some like real life scenarios to you. So I plan to go in that house and say, you know, this kitchen remodel may not be as easy as it looks on HGTV. Once we start pulling stuff back, there could be, you know, nasty cast iron behind there that needs to go. And you know, and just kind of push on those pain points to kind of get her to see.
You guys
it's
should
gonna
have
be-
filmed your first
Exactly.
flip, and then you just say, "This is what could happen," and you just let it play for 10 minutes.
Sure.
We could probably do that on
Probably
every
be buying
product
every
still.
house that you put on appointment.
Yeah.
Well, that's the deal you continue to follow up with, because you're inevitably gonna get a call in 3 or 6 months when they realize it's.
They give up.
Yeah.
Yeah. It's too
Yeah.
much to handle.
Yeah. Well, and you know, she may have inherited the property, but does she have the funds to, not only the funds, but the resources and the knowledge to do it?
Yeah, I don't know.
So
We'll find out.
Yeah, it's an interesting one. So, yeah, I have not been given any properties to inheritance yet. So I'm still waiting for that one to hit. But okay. Anything else on creative financing you want to go over before we call it here?
I don't think so. We hit sub 2 seller financing. Was there another one?
Yeah, there's one more. I think it was just creative financing.
Novations? Have you guys ever touched on novations?
Oh.
No? So it's I follow like a lot of Pace Morley, so this is all coming from his
Yeah.
stuff, but it's.
I love watching that guy.
Yeah, oh, he's incredible. He's got a really good following. So it's essentially taking something that needs some work on it, and then you're agreeing to get them the purchase price, right? But they're gonna carry the note, and you're allowed to go in and do the work while they're carrying the note. And then you basically do the flip while they carry the note, you do all the rehab, and then at the end of it, they get their price, and then you get the profit. Yeah, so that's literally all I know about it.
So you're almost doing a JV, let them.
Right, yeah.
In a certain way.
Right, so again, I don't know too much about it, but I've heard with the stagnation or maybe a little bit of a decline in the market, that's gonna be a really popular thing in 2023.
Nice. Yeah, I'm glad you brought that up. That's great. What about lease option? Is that a
Oh yeah,
creative?
lease option. Yeah.
Okay.
Yeah.
Lease option. Yeah, what is that? I guess from the seller's perspective, you're going in, and instead of buying it,
Sometimes
you're-
it's like a true hold, I guess, is kind of what lease options.
Right.
They're buying your property from you and leasing it back to you. Or we talked about the other day, like lease to own, I guess is another one that they can do. It's not really creative financing.
There's some people in this market, I feel like they're doing a sandwich lease option, where they lease option from the seller, and then they lease option to an end buyer, and they kind of get the difference
In rent.
in rent
Yeah.
and down payment as well. So that's a creative strategy.
Yeah.
As well.
There's a lot of
Yeah.
Good. So you're subject to, but did you get into this just kind of as an alternative to Berra's, kind of going, you know, with cash out refis, turning into kind of garbage with high rates? I mean, you mentioned earlier that by the end of it, you're able to refi out, and it basically covered your down payment, or your necessary, like, conventional loan down payment, essentially.
Yeah, one of my.
It's like a Berra kind of, right?
Yeah.
It was.
It's like
Yeah,
a
that's-
Berra
so,
with.
so it's a solution to
Yeah.
Berra's, instead of getting, an 8% cash out refi right now. I mean, this sounds like a good option.
Yeah, yeah, one of my investment criteria is I wanna be 75% all in of the appraised value. So
Right,
I wanna
yeah.
have that 25% equity, and that gives me options to, hey, I could refi and move that capital to another property, or, keep my equity.
Yeah,
Well,
and
what are you
don't
guys
have-
using
and you
that
don't have to
property as?
cash out.
This one is an Airbnb.
Airbnb,
Yeah,
right, yeah.
this is in Tower Grove. We had, I think we took out, the refi on it was like $330. So it's a higher mortgage payment, but we're able to Airbnb it on a nightly basis and get higher income on it to be able to cash flow.
So I think, like when I think of creative financing, I always think of someone saying, you can't pay that, or that doesn't work, or that deal doesn't make any sense. And the creative financing part is how. Like, how can I get this to work? We represent on our team a lot of buyers and that from California and Colorado, and we're like, this doesn't make sense. Like, you can't buy a duplex in 63139 that was going for $150 for $300, and the rents are $750. I'm like, it doesn't make any sense, but they're buying it, and we were talking about the taxes that they have to pay. So for them, it makes sense. Or they might have worked out a creative finance deal that makes sense for them with some type of balloon payment where they have 1% interest for a couple of years, but they're paying a higher price. So the deals work. It's just figuring out the financing part. A lot of investing is exactly that. The property matters, but the terms matter just as much as the property does.
Even in the seller's seat, I mean, creative financing can be very advantageous. Like what we were talking about before, if you have $300,000 that you're gonna make on a property, and you have to take the massive tax in, that actually makes a lot of sense to spread that out over the next 5 years. And with interest rates high, like, I'll take a locked in, 6-7%. Like, that sounds pretty sweet. That's not.
And look at what they'd
mortgages
get
are
if
gonna
they
look
put
like
in the
next
stock
year.
market right now.
Yeah, absolutely. I think that sounds like a pretty good deal.
Yeah, you see that a lot as the numbers get bigger. So like $1 million apartment complex,
Yeah.
the guy doesn't want to take the huge tax hit selling that, but he can get 6, 7, 8%, and on just selling you the note, or putting the note in your name.
And he was
then-
probably only getting a 4 or 5% rate
Well,
anyway.
I can figure out how to write 50,000 off my taxes. 300 is kind of hard to get off. Like, that's creative taxes.
Yeah. But yeah, then the seller doesn't have to operate the property anymore.
Right.
So they're just collecting.
He's
They're
still
just the
getting the
bank.
return.
They're just
Yeah.
the bank. So it's pretty attractive for them too in
Yeah.
certain situations.
So another thing too, if you own a house outright, you can take a loan and you can have that loan serviced, and then you can refinance that loan out of an institute as well to get a higher refi amount. I don't know if you follow me on that, but
That's creative, right?
if you own a house free and clear, you can be the bank for yourself. And then you can refinance that out, and then the bank is gonna pay off your mortgage. So like we bought a Airbnb and paid cash for it, and the institute that we went through only did 50% cash out refi is what they called it. But if I would have put that loan in my name, and then I would have had the bank do a refinance at 80% or 70, I like 75% too, for the record. It's safe if there's a market correction. If I've had that in my name, they'd have to pay off the mortgage, which is me, and then I'd just get more money back out of that bird than 50%. So, makes sense in my head. There's a lot to do in that.
Let's try to give a simple example of that.
Yeah.
So using the $100,000 again.
Using the 100.
So let's say I buy this property for $100,000 cash, but at closing, I draw up a note saying my LLC's got a $100,000 loan on this property, and we record it at the recorder's office. And
You're in first position.
I'm in the first.
Own
My LLC
property.
has a loan, and I paid cash for it, so my company's on it. So now I can go to a bank and say, hey, I don't want a cash out refi, I just want a rate and term refinance. And so typically the bank would say, oh, we can only give you 80% of the purchase price, but since you have $100,000 loan that they have to pay off to finance your property, they're gonna write your LLC a check.
We were talking about this the other day,
They're gonna write your LLC a check for $100,000, and then you go stick that in your bank. And so that's a creative way to kind of get around leaving 20% in the property.
But if I owned it outright, they would have gave me, in my case, 50%, 50 grand. On a good case, 80. So banks are getting a lot more conservative too.
Yeah, and the 50% is an example of probably a smaller local bank who rates started going up.
And it's an Airbnb, so.
And they got really conservative and started pulling down their LTVs.
So your interest rate would be better on that too, because you're not paying the extra half point as a cash out
Exactly.
refi.
Yep. Yeah, good point.
I'm writing that down.
That's kind of the reason I got in the business, was creative finance. It seemed to be kind of fun. So, any other questions?
I had a question more towards you talking about networking, for doing all of your deals through networking and referrals. So networking is a very broad term, right? Like you can network with wholesalers, you can network with agents. Did you have a specific niche you were networking with, or were you literally just that 500 people? Were you just kind of screaming from the mountaintops, everyone you met, here's my business card, I buy houses?
Pretty much, I went pretty broad. So I had shirts printed that said "We Buy Houses." So everywhere I went, like in school, I went with the shirt on that "We Buy Houses." Back of my truck has "We Buy Houses." So no matter where I'm at, people know what I do, and I don't even have to bring it up. So I kind of made it easy that way. And yeah, and just social media. Every now and then, I'll throw in a post. Hey, we're looking for houses to buy, and if that hits somebody at the right time, they're going to message you, and you're going to have a lead on your hands. Now I had some more strategic relationships with other people that were in the business that I was almost becoming friends with throughout this whole process, and so we've done deals together. But yeah, you're gonna have you kind of want to, and you went to an event a couple weeks ago that I saw you at, where we talked about networking as like organizing who are the top referral potentials in your sphere. So if you've got that agent that's going on multiple appointments every week, you want to touch him and talk to him and try to build a relationship with him a lot more than, Aunt Susie that may just come across somebody at her job that just needing to sell a house every now and then. So it's kind of prioritizing who in your network is going to be in front of the most opportunities to get you seller leads.
Yeah, and I think that's awesome because it's a zero cost.
Right.
Mailers cost. Smiling and dialing 150 people is not fun to get there, and I think that's really cool. And I think just like whatever that I'll add into that, it's like I think my biggest problem starting out was not screaming from the mountaintops that like I buy houses, I invest. Who do you know that's buying a house? I think whether you're an agent or investor, because when you start out you feel like an imposter, right? You feel like, well, I'm not a David O, or I'm not, I don't have this broad portfolio, right? And so I think that's really good advice, because I think I focus a lot on one as opposed to telling like my sphere, like not just my work sphere, like agents and wholesalers, but telling everybody that that's what I do. And I think that's a thing that I miss out on, I know.
Yeah.
And 4 years in, you still feel like an imposter, so
Yeah.
just get over it.
Yeah, I've bought hundreds of homes, and sometimes I'm like, oh God, Bob's gonna be here. I was like, he should be up here, and I'll sit over there. But you feel like that sometimes. But I think you have to say it, and people have to know it. When I started investing in real estate, I actually told everyone I was a real estate investor. Like, what do you do? I said, I buy and sell houses. I flip houses. And I had an exact terminology that I'd use, exact explanation that I would use. Never bought a house, didn't have the money to buy a house, but it takes a while also. So, and then before I knew it, I was doing 1 flip, 2 flips, 3 flips at a time, 5 flips at a time, and people started to know it, and then
It's funny you say that.
just
I don't know,
snowballs.
do you remember how we met?
Yeah.
So it was, and how many years ago do you think that was?
9 years.
So we went to the same college, but we didn't know each other. And about 9 years ago, I was taking an Uber to go party with some of
Yeah.
my buddies at a bar, and he was like, "Yeah, I'm a real estate investor. I buy and flip
I
houses
did.
and
I
sell
like at
houses."
night, like I would meet
And
everyone.
We became friends on Facebook.
Yeah.
And then I got back into this. I was like, man, I'm like, he really did it.
He
didn't
did,
And he's a lot of really
yeah.
active.
Yeah. But yeah, like I told everyone, like I would just meet, like that would be my thing, was go out and meet people, like any opportunity I can. I could have been out drink or whatever, and I was like, nope, I'm gonna like get out there. So
You
yeah.
know, funny you said, you just tell people that you didn't have any money, and a lot of times that.
I wouldn't tell them that. I would just say.
I wasn't telling them that, but because I know I don't have money to do it, that stops me from saying it, you know, and so it's a mindset thing is what I'm really coming to.
But
to
I
understand.
knew
I
that
know the
if I found the
strategies.
deal, when you find the deal, doesn't matter if you have money, I have the deal and I can say, hey.
Well, see, because the next question would be, well, what have you bought? Well, what have you done? You know what I mean?
I don't think a lot of
Not
people
having
ask
the.
that.
They don't ask
surprisingly.
that.
I don't think
Yeah.
anyone
They
ever-
don't?
Really don't.
Not really.
Oh, okay.
Especially
well,
if they're like the
okay,
seller.
we have t-shirts.
Yeah.
Yeah, it's weird. Actually, no one.
I don't think anyone's ever like said that.
Perfect example of this
Then you're
is
successful and like, hey, well, yes,
Yeah.
yeah, one of
Add
my
that to my profile tonight.
one of my very first meetups that I used to host a small meetup to even do more networking. And there was this 19-year-old kid that came to meet up, didn't know a thing about real estate investing. And it was just like, you know, who do you know that is potentially going to sell a property? And he ended up having a family friend that had a 4-family in South City. And he's like, I know of this family friend that's thinking about selling their rental property. And I had the money to buy the deal, and I said, I'll partner with you. And you can wholesale me the deal. And I'll actually help you go on the appointment, help you get it under contract. And I think I told him I would pay, I told him I'd pay $210,000 was what I told him that I was gonna pay for the house. And I go, you can get whatever you negotiate with the seller as the difference between that. And I think he got under contract for $195,000. And he walked out of closing with the biggest smile on his face. He had a $15,000 check. 19-year-old kid, didn't know anything about real estate. And that's how deals can get done. They can be
And then now he's a real estate
Yeah.
investor. After that,
Now
just
he's a
after
real
the
estate
one
investor.
deal.
Yeah, exactly.
After the one deal.
And now he's got a resume. Here's a deal that I did.
And you know, investors usually ask each other how many doors they have, so just go around your house, count how many doors. I got plenty.
I got so many doors. Put it up a vision board. That's funny.
Yeah,
I've got a story along these lines. We were at a restaurant one time at a real estate meeting for a franchise deal I used to be a part of. And the waitress was asking what we did, and just we're real estate investors. We bought a house. This is probably a 19 to 20-year-old girl that just inherited a house from her dad. Bought that house. We sold her a rehab we had just finished, because Dad's house needed quite a bit of work. Later bought a house from her sister and brother-in-law that they had inherited. So that one conversation was, $140,000 transaction. So it's really, to you guys' point, it's talking to everybody. I always go back to that story because it's the simplest things. If you love what you do, you're fired up about it, then you should scream it from the rooftops.
Yeah, and if you're at a party and someone says, "What do?" You say, "I flip houses," and you shut up. They're gonna want to know, like, "Oh, you gotta tell me like about that."
Yeah.
Like it's actually not that great. Like I thought it was great. Like, it's actually horrible.
I've been so proud to be a real estate agent. That's what I've been shouting. Maybe I get up. Okay, lead out with, I'm the investor. Is that what most agents do? What do you lead out with?
I don't do retail work, so I just do investing.
I know Tom doesn't want to do any retail.
People are like, oh, license, can you help? Oh,
Well, you can send those my way, cause I like those too, but I really
But
want
to your point, actually, it's interesting because whenever I first got licensed, going back to kind of feeling like an imposter, I felt like an imposter as an agent. And then whenever I really did get into the investing side, I was more proud of that, I guess. I really led with it. And when I started doing investing, people started coming out all the time and asking me about their houses and stuff like that. Everybody wants to know about investing. And then suddenly I was the real estate agent too. You know, and like, well, I don't really do that anymore now, so I'll refer you to somebody.
This
So
was happening with my travel.
yeah.
Everybody want to travel now, so it's like,
Yeah, it's you know, and it becomes attractive because everybody's seeing the HGTV things, you know, and you know, it's kind of sexy to be the investor, so people ask questions.
On the outside it is.
Yeah.
Doing it.
Yeah.
Practice your elevator speech, though. Like, stand in the mirror and practice. This is what I do, and polish it up. But so when they ask you, I mean, you're on it, like it's rehearsed, it's got that answer, and you're not kind of fumbling, right? I think that's so important. It seems like it's pretty obvious, but most people don't practice that elevator speech. But it depends on your audience. You may have a different elevator speech for different things that you're working on. But just know what it is. So when they ask you, how that elevator speech is going to get them to ask that next question.
got some
All right, you good? Good. All right, appreciate it, guys. If you want to stick around and get to know everybody for a little bit, I appreciate everybody coming. Our next meeting is first Wednesday of March, and we are going to talk about, let's see here. I think we're talking about building a team. Talking about building a team for your investment properties. Yeah, I believe so. Yeah, how to build your investment dream team will be first Wednesday of March. So, yeah. All right, thanks. Appreciate it. Awesome. Thanks, Chris.